You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
Welcome back to the Option Block, everyone's favorite. I hope it's your favorite. It's currently mine, bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network. 15, that's right, 15 programs for you guys to choose from now, including our most recent, let's put it in the silly column, our most recent silly edition, The Business Show. If you are so inclined to check out some business news with a dash, if you will, of improv comedy mixed in, then check that out. Of course, before that, we also added This Week in Futures Options, so check out numbers 14 and 15 in additions to our network wherever you find this fine program, the Option Block, and of course all of our archives. And the easiest place to do that, the mothership, the flagship, theoptionsinsider.com. While you're there, maybe check out some breaking news on the options market, some educational articles, or whatever else floats your boat over there on the ever-expanding sea of content that is the Options Insider. And if for some reason you don't want to go to the site, or you're just busy, you're traveling, you're on your mobile device, whatever the case may be, iTunes, TuneIn, Stitcher, they all work as well. Even Google Play Podcasts. Some of our shows are up there. I think not all of them are on Google Play for whatever reason. But so for all of you out there who are rocking Google Play, probably the easiest thing to do, go get our mobile app available for iOS, Android, and the Fire OS, and it works on all your myriad Android handsets out there. So if you have a problem, check out the apps. It's probably the easiest way to get everything over there. And of course, while you're listening, while you're downloading, while you're streaming, reach out to us. We love to hear from you guys, your questions, your comments, your insights, your hilarity, whatever you want to share with us. We love to hear from you guys. And joining me on the program today, the usual cast of characters. Let's go in order of proximity. By the way, I didn't mention two things. First off, we're not streaming live today, so if you're missing out on the live stream, you're upset at us. I am sorry, but we'll be back soon. The reason we're not streaming live, and probably why I sound a little bit different, is I'm actually on the road today. We're going to be on the road for the next couple of weeks, hither and yon, but mostly in the southeastern portion of the U.S., where we're checking out some nice warm weather down here in scenic and sunny Florida. So if we sound a little bit different, that's why. Not in the usual studio. We're in the mobile studio today. But joining me, let's go back up the East Coast, all the way up to the tippity top, to the Duchy of Maine, where we welcome on the Rock Lobster, Mr. Andrew Giovinazzi from the land of the pit. Mr. Rock Lobster, welcome back to the program, sir.
I'm happy to be back. Normally, since you're on yet another vacation in Florida, I would take umbrage, but since it is vacation season here, there's no more umbrage for me to have.
Yet another vacation in Florida. You know, it has been exactly a year since my last vacation in Florida, so it's not like I'm doing these willy-nilly every month or so. It would be nice. But unfortunately, my Florida vacation schedule is somewhat truncated of late. But I will try to truncate it even further to accommodate the whims of the Rock Lobster. You feel better?
I do feel a little better, but I don't see it happening. I still see the once a month
trips to Florida. Okay, let's beam back to near to our usual studio, where we find good old Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always good to be here. And if you live in St. Charles, you don't need to take a vacation. Oh, wait, I just did. Never mind.
Yeah, that's true. You were gone for 2 weeks yourself. Somewhere in this. Oh, no, you went to Hawaii. That's right, correct?
Yes.
There we go. yeah,
I was on a cruise ship. They did not have the studio available on the cruise ship, unfortunately.
No studio available. See, unlike you guys, when I travel, the studio travels with me. So I'm still rocking and rolling, doing shows no matter where. I've done shows, literally, I kid you not, I've done shows from the theme parks here in Florida. I did a Ball Views from Hollywood Studios not that long ago. So all sorts of interesting stuff I have done here for the network. The sacrifices I make so you folks can continue to have your content. All right, and with the gang assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is the portion of the program where we break down what was moving, what was shaking, what was rocking, what was rolling in today's market activity. We are recording this today on Monday, June 20th. And an interesting start to the week after all of the hand-wringing last week, the will they, won't they about Brexit. Seemed like a lot of people leaning in the they will, as in they will leave. And as a result, we saw vol getting bid up to somewhat extraordinary levels. I believe the VIX Cash actually flirting almost with a 23 handle at one point last week. So it seems like crazy town. I often joke on Volatility Views and on this program as well that volatility traders, some of the most schizophrenic to be found in the marketplace. They got to have it. Wait, they don't want to touch it, or even bipolar, however you want to view it. And that's certainly on display again this week because they had to have it. They had to have it. They had to have it all last week, and then today they don't want to touch it anymore. Most of the major markets rallying about 0.5%, a little bit more to close the day. The Dow up about 0.75%, and of course all that the VIX Cash taking a bit of a respite. It was off over 2 handles at one point today. Ended up closing about 1 1/4 handles, right around the 18 handle, 18.17 to be precise. And yeah, kind of a weird day because it seemed like they were, in fact, we were debating this on Vol Views that just went out this morning. You guys are listening to it now about whether, when will they sell this vol off, if they'll do it after the event, if the event will be so tumultuous that vol will stay inflated. Most of us agreed that vol was going to come off, but probably like most big events after the event itself, not leading up all the way into, not even leading up, just 4-5 days ahead of time. It's a little bit early, it seems like to me at least, to be putting a pin in this one and calling it done. All on the strength of one big vote, one big poll coming out of Britain. It seems like that would be, actually not would be, he did assassinate her, but the person trying to really motivate Britain to get the heck out of the EU may have actually had the exact opposite impact. People rallying now around the stay in the EU cause. It has this emotional resonance that it didn't have just a few days ago because of those tragic events, and now it seems like perhaps he was his own worst enemy. Yeah, VIX Cash selling off all the way down to about 16.5 today before rebounding, getting back into the level we're at today. So interesting stuff. Maybe we'll start there, Mr. Rock Lobster. You and I were chatting before the show on kind of just what kind of nonsense this is. I'm sure that was probably a big topic of discussion in the old pit chat as well. People clearly not scared to let some vol go here many days ahead of the big vote.
I think what amazes me is how easy. I mean, I guess the vote flip-flopped a little bit, but isn't there still like 20% undecided in the middle? Like, okay, so you got 45 stay in, 35 out, and then 20% that they don't know what they're going to vote. So I think the market, it feels like it overreacted a little bit because anybody was looking for some good news. But I still think vol is going to tick up a little bit into the event. I'm sorry, that's how I'm positioning, and that's how we're positioned, and it'll tick up, and then it's just gonna all go away because ultimately it seems like everybody prefers the devil they have until the total devil they don't know, and it seems like that's what human nature is. So, but we were surprised that was a subject for the pit chat today. It feels like it really felt like that vol was going to hang through the weekend, and it didn't. So, but then you think about it, right after this Brexit vote is the 4th of July, which has not historically been a banner couple of weeks for volatility. So whatever you're holding on to at this level, because VIX made remember, it was 13.5 just 2 weeks ago. And it could easily get back there again, because all this crap has taken Fed raises out of play. And so, I mean, there always can be a one-off event, but at least on the calendar, this vol could go quite low. And yes, it was just surprising because of the severity of the reaction, but just tells you how fast those fingers are ready to just let this stuff fly if they don't get the result they want.
Yeah, all this on the heels of just one poll coming out of Britain. It does seem like a little bit early to let the vol fly. I think I'm with the camp of the pit shatters. I don't say that too often, but I'm with the pitters today. I think this is a wee bit too early. I would definitely be leaning on some stuff coming back in, going into the event before it all inevitably comes out again. Probably Friday, unless of course this vote does rock everyone's collective world, in which case we could be in for some new level of structural volatility. But I don't really see that happening. And the funny thing is about all this too, everyone's treating this like the world as we know it comes to an end on the 24th, and there's this new paradigm going forth from an economic point of view. Yet none of this is going to play out that Friday. This is not going to happen. Instead, A, this is a non-binding vote. B, this thing's going to take at least probably 2 years to play out, because they have to figure out how they're going to leave. There's multiple competing models for the way they could exit the Eurozone and the different impacts those would have. Those all have to be debated at length. If you've seen any parliamentary procedure over there from Britain, it takes a while to get all that stuff done. So this is not something that's going to be unfolding on Friday morning, that Britain's just out. So it's kind of funny the way we play it up. And then one poll a few days before this non-binding vote on this process that is going to take multiple years to play out. Somehow this one poll has caused this major market movement. But, we've seen stranger things, I suppose. But this is just this one definitely is a weird one. If you had told me coming into today that I would say, oh, yeah, vol's going to become just crushed across the board, I would have laughed at you. And there you go. Again, the bipolar / schizophrenic nature of volatility traders coming back to roost. Uncle Mike, what's catching your eye out there today, sir?
Well, not so much today, but last night is when this all came out. What's concerning to me, being the resident bull of the show, is the fact that when futures opened last night around 5 o'clock Chicago time, we were up probably about 25 points in the S&P futures. I think we're up maybe even a little bit more later in the night. So it's obvious that this pop has come from the Brexit information. But what's concerning is the fact that we opened the day up probably roughly 20 points or so. Actually about 22, 23 points it looks like on the S&P. And we faded it. Well, I shouldn't say that we didn't right away, but the markets did continue to go even higher, and we peaked out probably around 9, look at this, a little bit after 9 o'clock. And it's just been downhill since then. So the concerning thing is that if this is a Brexit rally earlier in the day, it did not follow through. So I would still urge people to take this with caution. Now, what's going to happen with the Brexit? I really don't see London leaving London. I don't see Britain leaving the EU myself. In terms of what's the reaction going to be with volatility after it, I don't know if it's necessarily going to just come out like I don't see the VIX going to 13 by Monday. So it could come down a little bit slower, but I'm almost in the camp that I don't know if what volatility is there right now. I'm not convinced that all of it is based upon the Brexit alone. So how much of it's Brexit vol and how much of it is just regular, normal, run-of-the-mill, everyday fear vol, that remains to be seen. But what I'm saying is that I don't think it's all Brexit vol, so to speak. And I don't think I do agree with Andrew in that I can see us coming up in VIX land going into the Brexit, or the Brexit vote, but I'm not convinced that it's all going to just come out like a pin in a balloon right afterwards.
Yeah, that could certainly be the case, particularly like I was referring to before, with the fact that we don't really know what form or shape this quote-unquote Brexit is actually going to take. That does that does complicate things quite a bit. I was looking here as we were researching the show, an interesting article, perhaps a bit of a poorly timed article over there on the journal entitled Brexit Volatility Brings Tempting Opportunity for Investors. That's the case this morning, and then maybe they were a wee bit late to the party. They obviously wrote that up over the weekend thinking that all this vol would still be in there nice and juicy today. And, of course, a lot of that vol coming off pretty aggressively today. They even in this article, they cite a hedge fund manager who was extolling the virtues of VIX calls and how great that's been. And it was a good play up until today when a lot of that love coming off a little bit. He's also talking about how he wants to hold on to these VIX calls because he says if there's a Brexit, then volatility is going to explode. I'm not sure if I concur with that outlook, but either way, if he's still holding on to a lot of these VIX calls, perhaps regretting not taking the opportunity to exit when he had a chance last week. I mean, I agree with you, Andrew. I think it's going to firm up again before the week is done, so you may have a better opportunity yet again, but still, who knows if perhaps the height of the madness may indeed, the height of the froth may indeed be behind us. Interesting point, though. Do you think if it does come to pass and Britain does vote to leave, maybe it'll be a little bit more shocking now given today's poll results, but other than that, are you on the same tip as this guy, Andrew? You think vol's going to be back up in the mid-20 handles and beyond, or is this more like your typical event risk and it's going to come down the other side?
I think, yeah, if they vote to exit, I think that just puts the whole EU thing, it just makes it messy. So short term, I think we would have some volatility, but ultimately it'll be a little of, okay, they're leaving, the world goes on, but it's probably not a positive thing for the Eurozone in general, or maybe it'll wake them up that they might need to improve their improve their policy, because if Britain's leaving, it's not because they're happy. So maybe they have just a little bit too much regulation and rules and groupthink,
Yes, Eurozone never been accused of having too much streamlined bureaucracy. No, not by a long run. They are certainly in the opposite camp. Speaking of the opposite camp, this rally today, everyone had to have themselves some equities. Long demand for equities exploding today. Apparently, no one told Goldman. Goldman slashing today what they called their stock demand estimates, slashing their 2016 estimate of U.S. demand for equities by nearly half today, citing a weaker appetite for stocks among retail investors. Let's say they initially projected equity demand of $225 billion for this year, with $325 billion in foreign stock purchases by U.S. investors, $50 billion in credit investments, blah, blah, blah. They get into some of the weird numbers here. Now they're cutting that down to gross equity demand of $500 billion and overall U.S. equity net demand. So yeah, interesting stuff. Again, maybe today's rally notwithstanding, Goldman perhaps not buying what the market is selling right now. I don't know, Uncle Mike, you're our resident beer. This kind of news would imply perhaps very dire news for the strength of this rally going forward. What do you say to our friends at Goldman who are saying, yeah, no one wants this stuff anymore. We're out. We're done. Cutting our forecast.
Well, first off, you can tell Mark Long goes on vacation since I'm today the resident beer instead of the resident bull. That wouldn't really surprise me, but the thing that I always tell people about Goldman is that when oil was at, I believe it was 147, when it was at its peak a few years back, they forecasted it to go up to 200. And Goldman isn't necessarily always right. So I'm going to say that. And the other concern that I have is that a lot of times that they would try to unload a lot of their bad securities a few years back, a lot of their bad loan obligations a few years back onto their clientele. And they made a big deal how they were fined $1 billion for it, the biggest fine in SEC history, but yet they made a lot more than $1 billion. So I wouldn't read too much into that one way or another. I just think that I kind of put what Goldman comes out with in the same camp of how we like to put analysts on this show, because, well, they're pretty much about the same amount of validity, in my opinion.
Are you saying Goldman's going to talk up their position for their own ends, sir? How dare you? How dare you say such a contentious and just slanderous thing, sir?
I know. I'm sorry to disgrace the show.
Goldman, you could actually have done pretty well over the past 6 to 8 months if you faded a lot of these Goldman newsletters between maybe not this, but certainly their call on gold or crude, and how you had to buy all the crude vol possible heading into one of the biggest droughts of crude vol in quite some time was pretty impressive on the wrong end of the tip. Speaking of impressive and perhaps wrong-headed, we'll just do a quick little update on some of our fun nonsense stocks we like to check in here every now and then. First off, on the nonsense stock update, good friends over there at Apple, they've had a lot of interesting back and forth of late. WWDC coming out. People, though, move Apple stock on hardware, not on software. WWDC was all about software, so not a lot of people getting really too excited. When they announce some new hardware, they're a hardware company after all. That's when the stock's going to move. So it didn't really move too much off of WWDC. There's some news about them getting shut out of Beijing, but now apparently they might open some retail stores in India. So there you go. Out of Beijing, but maybe into India, so maybe it's a net win. Stock, though, pretty much unched on the day today. But Tesla, if you want to talk nonsense stocks, Tesla leading the charge on yet another day with yet another nonsense headline that people seem to eat up. The news today, Elon Musk announcing that Model S can also be a boat. And that apparently was enough to move the stock up 2%. So there you go, Mr. Rock Lobster, our nonsense stock update for the week. What's your thoughts? Model S can be a boat. Does that mean you got to buy the stock now?
How does one make a Model S a boat?
Don't know. I didn't get a chance to read the whole story. I just saw the headline that was put everywhere, and it made me chuckle. So I had to put it in there.
Maybe it's like one of those duck boats you see up in the Wisconsin Dells.
So how about this? So somebody's going to say, oh, Elon said it can be a boat. So he's just going to drive it off the end of a wharf in San Francisco and try to make it a boat. I wonder. It's like the guy that sued Winnebago for putting cruise control on his, he set cruise control and just walked in the back like the Winnebago was going to drive itself.
I think that was a Simpsons episode or something along those. Several people have done that in the past on different shows, I'm sure. And the other thing we got to hit on today, because it is the big news of the day. If it wasn't for all this Brexit nonsense, it probably would be top of the news. That is, of course, on Friday, late Friday, after the close, the SEC, after just dancing around this issue for so long, for the better part of 8 to 9 months or so now. Their approval of IEX as an exchange. Of course, if you haven't been following all this drama, listeners, then check out our Trading Tech Talk show. We touched on it quite a bit over there. But the crux of the issue was IEX introducing their 350 microsecond speed bump into the marketplace. And the market collectively lost its mind, for lack of a better word. I've never seen more vitriolic comments on an SEC comment letter request. Big firms that never talk about anything, like Citadel, diving deep into the fray on this, saying it was the end of all things, was going to destroy the markets, people coming in pro and con, a lot of heated debate on both sides. Again, check out Trading Tech Talk if you want to hear all the back and forth and all that fun stuff. But then the SEC tried to punt, as they are wont to do, and just said, yeah, anything of that degree of delay is pretty much de minimis. We're not going to rule on it. And then people lost their minds even more because they wanted the SEC to finally take a stance one way or the other. So they kind of forced their hand. And this Friday, in an after-market vote, they finally came out and said, yeah, we're going to approve IEX is an exchange. So all the people out there who were kind of saying, let's let the market decide on this, and let's see if it is indeed the worst thing since sliced bread, or if it's going to be the best thing in the world. We'll finally see now when this comes into the marketplace. So of course, all the exchanges out there, in terms of impact for you guys, a lot of other exchanges are probably prepping their own versions of some sort of delay, whether it's 350 microseconds or more or less. We'll see. But there are going to be a lot more speed bumps hitting the marketplace now as a result, which will be kind of interesting. And certainly a lot of the HFT firms out there, like Citadel and others, who've been so vigorously opposed to the IES application, probably not too happy coming out of this weekend. I don't know, Mr. Rock Lobster, was this, or Mike as well, is this anything that came up on your radar today? I mean, I know the nuances of equity market structure aren't high on your list, but this one has been pretty heated and pretty contentious, and it could end up impacting even retail execution in a lot of interesting ways going forward.
If you don't like it, trade futures. That's kind of what I say on it.
There you go. That's the answer there. That's your answer to everything. When your kids come to you, tell you you're hungry, they say trade futures. That's just your answer to everything, Uncle Mike. But yeah, that certainly is one way around it. You don't have the same myriad fragmented exchange structure in the future space that you do in the equity space. So that's certainly one way around. I don't know. You have a lot of high-end guys in your chat room, Mr. Rock Lobster. Any of them concerned about this, or is this kind of all over their heads?
I think this is not on anybody's radar screen as of yet. But hey, we need another exchange because we already have 12, 15? I don't know. Anybody with it's some little tricked up dopey piece of technology. I don't know. It's hard for me to agree with Citadel on this. I'm just trying to figure out how all this really, how all this is supposed to help anybody do anything better.
It'd be interesting to see. You mentioned, more exchanges, and certainly IEX and Equity Exchange. Now we'll see. Maybe if they bring that magic speed.
So if your latency's too good, then you're just going to be like everybody else. So is that kind of the speed bump, right? If you're ultra fast, it doesn't matter if you're ultra fast because we're just going to make everybody the same.
Yeah, it kind of is a bit of a leveling playing field. My issue with it is that it's a very discrete 350 microsecond delay. I think a lot of people out there in the space who know this space pretty well advocate for a more random delay, because if you know exactly what the speed bump is, the HFT guys can program their algos effectively around it. If it's a random delay, you don't know how much you're getting delayed by. That makes it a lot more challenging. So there's ways. That's the funny thing for all of the back and forth, the Sturm and Drang about this delay, how impactful it will actually be on the people it's trying to stop. That's the big question. And, from all the noise about it, you would seem like maybe it might indeed be impactful. But, yeah, it would seem to be a fairly easy task to program around a delay when you know exactly how long it is. But that said, we'll see how this plays out. This is, again, kind of like Brexit. The impact of this is not going to be seen and felt for some time, so we have to see how this all plays out. But all the people out there who are hardcore into how the markets work, and on the tech side certainly, are very much up in arms. This is their equivalent of the Brexit. So we'll keep an eye on this one. Stay tuned to Trading Tech Talk for more about that. Meanwhile, it's time for us to keep on rolling with this program right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome back to the Odd Block. This is indeed the portion of the program where we break down what was on our radar, what was catching our eye on the other side of the options market, down that dark alley that most people are afraid to go down. We're not. We're silly. We go down those alleys, so you guys don't have to. We're going to kick things off. Actually looking back at some previous alleys we passed, in particular the one we talked about back on June 2nd on the show, which was Xilinx. Remember, we had some kind of late-breaking activity coming into the show that day about someone piling into, I believe it was the 48 halves in Xilinx, which was a little bit out of the money calls. This was on June 2nd. Those calls expired that Friday, June 3rd. So these were effectively daily options, and they were piling in. About 12,000 total traded that day. So very, very aggressive. There were big sweeps coming in. Bought about 7,000 for about a dime, so that's 70 grand right there. And then a total about 12,000. Some of these printing as high as about 23 cents. So the latter 5,000 or so going up a variety of different prices, 18 cents, 20 cents, 23 cents. So the total price on the rest is kind of inconclusive. But this person probably shelled out at least $1.50, if not more, for all of this very, very near-term one-day upside. And Mr. Rock Lobster, for all of his efforts, all of his expense, what did he get? Well, a whole heck of pretty much nothing. The stock the next day, this guy clearly seemed like he thought he knew something, and the stock was going to be off to the races the following day, and the stock never really broke 48 the next day. I think it got up to about 47.97. So these calls were half a buck out of the money the entire day. There's maybe that alternative theory that this guy was using this as some sort of crazy near-term hedge on a huge short stock position. That I suppose could be the case. But he didn't really get a huge move to the downside either. And for all that money he spent on that very, very near-term bit of protection, I don't think this trade really worked out in either fashion. Either way, Mr. Rock Lobster, looks like he threw away at least $1.50, if not more.
I think the only thing he got after this, he didn't have enough to buy a bagel. His broker made a couple of bucks.
One might say he loved his broker.
He did, and this is just I don't have enough to buy a bagel trade. I don't.
Is that our
So
new
somebody-
qualification for it? I don't have
some-
enough to buy a bagel. What about a latte?
Well, sometimes, when you get a zero on something, a zero looks like a bagel. If viewed from a certain perspective, a bagel and a zero look very similar. So I'm thinking, this guy just got the big bagel. He got nothing for this. So I was trying to think, if I try to look for some stock printing up there, like maybe he tried to sell stock, a whole bunch of shares, but that still left, it never got high enough where he could even, because there's one strategy of pinning, where if you buy have calls cheap and then you move to the strike, then you sell stock against the strike, you create a synthetic straddle for a low price, which is a good expiration play. I like that play. It gives you a little bit of action on the strike if you have, let's say, some latent contracts or something. But the
you need a nice
but
pop
I
for
just,
that one. You, nice,
you do.
Nice,
I didn't see
you
it.
didn't get that nice pop.
He got a Tootsie Roll pop that somebody already bit. he got nothing.
Yeah, this was a good one, because I remember at the day it came in, it was just such ferocious paper. This guy had to have it, and he had to have it with 1 day to go, and it just seemed like it was also the kind of paper that if anything did happen in this stock, how could the SEC not step in and freeze this guy? It was so egregious if it was indeed well timed. It actually works out in his favor that it wasn't. He only lost $1.50. He's not facing any jail time as a result. He just looks like a fool, and he can't afford to go to his local bagel shop now.
It's like heads he loses and tails he loses. It's not it just was not. It just isn't.
Yeah, when it's so crazy that it comes on our radar right as we're doing the show, it's not a good sign for you. And either way, because even if you make money in that sense, chances are maybe somebody may be knocking on your door right after that trade happens. All right, let's move on to our actual paper from today. Going to kick things off. Surprise, surprise, Mr. Rock Lobster. We're back in the mining realm. Haven't talked about mining a little bit. Talked about a lot of drilling and petroleum producing stuff. Not as much in the mining of late. We're back on that tip. Gold has quieted down a little bit, certainly since the crazy froth-filled days of February into March. But here we are back again in the mining tip. In particular, good old Newmont Mining. I haven't chatted about these guys in quite some time. Ticker symbol NEM, N-E-M, closing today 35.30, off about 1% or so today. This is the name that does about 14,000 contracts a day, so not bad volume for an odd block name. This is about 15x what we normally talk about. Today doing 46,000 contracts, 7-1, Mr. Rock Lobster. Puts over calls. That should give you some indication of what exactly caught our eye today. And this is kind of like the polar opposite of the trade we were just talking about, where that guy piled into calls and he had to have it, loving the stock, thought it was going to go higher. Our friends here in Newmont not liking it so much, to the tune of all puts all the time. Puts were the order of the day today. We started off this morning highlighting on the website about 1,000 lots of the July 32 half puts going up, paper buy-in in one large chunk over on the Philly for 86 cents. But that was kind of just the beginning of the deluge, Mr. Rock Lobster. Total today of 8,000 of the July 32 half puts going up, 11, nearly 12,000 of the July 32 puts going up, 10,000, nearly 10,500 of the July 31 half puts going up, even for good measure, 1,100 of the July 30 puts. Oh, yeah, and 2,700 of the July 33 puts going up. So add all that together, and you get somebody out here who clearly is not loving themselves some Newmont. Open interest, only strike with really any size open interest is a 33 strike, about 6,500 contracts. Everything else is zero or negligible. So interesting stuff. Apparently, they had to have themselves some downside protection, Mr. Rock Lobster, and they had to do the Tosaw style, a.k.a. stupid style, to get this off. So what's your take here on this put palooza in Newmont?
You know what? You remember the story, not like, was it a week ago, where George Soros like, oh, I'm buying gold. I'm buying gold miners. I'm buying all this, gold stuff. I'm wondering, because it's like 30,000 contracts, kind of hedges 3 million shares. 3 million times 30 is like 90 million bucks. It kind of is right around the size that guy just might have to buy some put. So if you bought the stock at 16, it's trading 35. And, just in case he doesn't get the action he wants here short term, he's buying some of these puts. all that is all total speculation on my part, but it just looks like a trade of a fund that has bought tons of stock. They have a huge capital gain. In the July Fed, this whole thing is just making them a little nervous. Either way, if obviously if you're long stock, you have the synthetic call, so it's not that big of a deal. I think it's definitely a play for, obviously a downside move. But that's kind of what it feels like. It feels like it's hedging a position that has already made a lot of money, because of just the nature of that purchase. But I could be, again, speculation, but they're buying a lot of puts. You don't buy 30,000 puts for nothing.
Yeah, I like where you're going. I like where your head's at on this. I like that it's the Soros puts. I can get behind that. That's an interesting one. But you're right. Interesting stuff here as we look at Soros. And it does that was paper we talked about last week or maybe 2 weeks ago on the show. Soros buying a bunch of SPY puts. And then also, I believe he was loading up on shares and calls in a bunch of gold miners, including perhaps this one. Yeah, interesting to think that perhaps they're coming in. If there was a fund, Mr. Rock Lobster, that was prone to hedge things Tosaw style, a.k.a. stupid style, I think the Soros funds might fit that definition. What do you think?
Yes, he's got about, $20 billion from using that particular style. So it obviously works for him. So I'm not when he is definitely, when he has a hunch, he bets a bunch. And I think maybe if he's up a ton, he buys some puts. Maybe
$20 billion stupid. I love it.
He's not afraid. I'll give him that, man. He is not afraid. So, but for him, this is just like, it's a little tiny bet. It's only like $90 million. I mean, it matters, but it doesn't matter, but it matters because it's still $90 million. So if he's up big money on this, what's buying some puts, getting him through the summertime and making sure his thesis is correct to ride it longer. So that's what I see these puts at. But again, those were all created in the windmills of my mind. I have no hard and fast evidence as to who was buying.
As we know from having been on the show with you for a while, that's a scary place to go.
Dark and breezy.
Misleading to me, but now here that makes a lot more sense. As we dive into our next name here, Credit Suisse, for a different departure here. Ticker symbol CS, closing today, $12.84, up about 30 cents or so on the day. This is a name that does decent paper, as you might imagine, about 5,500 contracts a day, doing 12,000, so about 2.5x, about nearly 8-to-1 calls over puts. That should give you a hint of exactly what was going up out here. And I said about 12,000 contracts going up today. Listeners, about 10,000 going up in this one trade that caught our eye. I started off going out with one block of set 15 calls going up, paper buying 5,000 for 35 cents over there on the ISE. Another 5,000 traded shortly thereafter over there on the Philly. Again, a total of a little over 10,000 and change going up today on this strike. That's on open interest of just 8,700. So clearly open in paper. And like I said, Credit Suisse hovering right south of the 13 handle today. And our friend here clearly liking himself the chances that it's going to be rally homo north of 15 and doing it by the start of Q3 there. Looking back at the last 6 months or so of Credit Suisse, and he's fighting a bit of an uphill battle. This thing hasn't been north of the 15 handle since about right at the beginning of February, so right at the height of all that tumult. That was, of course, right when they announced earnings in February as well. Clearly the market not liking those because they've been trading south of the 15 handle ever since, sometimes way south, down in the 11 handles and beyond. So interesting stuff cooking here. Mr. Rock Lobster, what should take A on this paper and B on the direction perhaps behind it? You liking this guy's love for Credit Suisse, a.k.a. Symantec?
You know what? I need a clerk to help me edit my stuff faster.
Your goal is to throw a wrench in my works. You're succeeding admirably, sir. Well done.
Well, I just want to make sure that you're you're on the,
through the show. I appreciate
yeah, and you're quick on the fly. Got to be quick on the fly. I like this trade because Credit Suisse seems to be everything that's wrong with with Euro banks. They're the poster child for just seeming to screw up whatever their franchise is. I'm not quite sure, but you have market at very close to all-time high, at least U.S. equity market, and Credit Suisse is, it is right near, if it's not near the 2-year low, it might be the financial crisis. It's just and I think this is part of the problem with all the whole EU and their just total lack of whatever. The fact that a bank like this with that franchise just is struggling like it is. So somebody clearly is betting that the stock gets back into the 20s. That's what this kind of trade looks like to me. Credit Suisse has a very ragged earnings, and it's one of those, they have such a giant book. Nobody knows what's under their skirt, all that kind of stuff. So I just think this is a bet on, if things kind of steady in the euro area for a while with Magic Mario Draghi. That's what they're betting on. I think this is like a post. They're just giving themselves plenty of time. And relative volatility for these calls is just, let's just say this. It's high volatility for Credit Suisse. It is not it's not very high volatility for a $13 stock. But overall, for the way Credit Suisse used to be, I would say, yeah, you would never want to buy calls like this. But for a $13 stock that could go to 20, I think it's a pretty fair bet out to September. Not bad for a call buy.
Not bad. If you're going to buy calls in Symantec, that's the way I certainly would go.
You would go buy them in Credit Suisse.
You would buy calls. It's it's the well-known pairs trade, Symantec to Credit Suisse. And all the listeners who can't see our chat and our notes are scratching their heads saying, what are they laughing about? But trust you, listeners, it's funny if you could see it from our perspective. All right, moving on to our final name / victim here on the old odd block today. Taking a bit of a flyer for our last one here. This is Community Health Systems, ticker symbol CYH. I don't believe we've covered this name. Could be a newcomer here to the odd block, our 500+ year extravaganza. Closing today, $13.19, up about 1% or so on the day. And this is the name that does about nearly 4,000 contracts. Doing today about 5x that, a little more, about 22,000 contracts today. 32.7 to 1 puts over calls. Listeners, once again, that should give you some inkling of where our attention was drawn. In this case, it was out to July, and it was the July 20 puts. Paper lighting those bad boys up to the tune of just blasting them out at prices ranging from 20 to 25 cents, a total of nearly 18,500 going up on the strike, all on open interest of just 200 plus contracts. So clearly this is open in paper. Someone drawn a huge line in the sand here in good old CYH, saying the 12 strikes, so about 1180, 1175, and no farther in terms of downside on this stock. Looking to harvest, if it does go their way, looking to harvest about 2% or so on the trade. If not, they're picking themselves up a good chunk of CYH at about 1180, about 1175 or so. Looking back at the year that was, good old CYH, it's not a bad level. It's certainly a little about a $1.50 or so lower than where it is right now, where it has been trading recently. So you can certainly perhaps not fault this one. This name has been trading as high back towards about a year ago, so mid to late summer of last year. It was trading as high as about 63, 64 bucks. So if our friend picks it up at 1175, I'm guessing perhaps he's not sweating it all too much, even though the better part of the last 9 or so months from into Q3 till now have been spent getting south of the 20 handle pretty quick. But beyond that, it's pretty interesting to watch. Interesting level. Mr. Rock Lobster, take us home. What's your take here on our friend and his fairly interesting and sizable line in the sand in CYH?
Yeah, you know, I'll bet you if you searched the Option Pit website every time I looked at, every time I wrote down line in the sand puts, I wonder what the track record of that is for the line in the sand puts, because usually these guys are not too bad on those sales, but again. I think
you just
community
volunteered
health
for a research project, sir. That's what it is. Tracking. I want to see an Excel spreadsheet by next show outlining the performance of all the line in the sand put sellers, and let's compare and contrast.
The only thing I could say is Danielle, Nancy. But I thought Community Health Systems had some problem with Medicare paybacks or something, and that a stock that used to be like $60 is, you know, I think there's a very unclear future for the kind of earnings they're expecting down the road, obviously with the stock that's down like, you know, 75%. But somebody wants them some stock. I think, you know, they go, I'll take the 2% yield till July, or I'll take the stock at 12. So again, I think it's probably kind of a savvy, sneaky way to purchase this particular equity. So there you go. That's what I think. And we'll see. I'll bet you a couple other line in the sand puts, I think, have done okay recently.
We don't have to do all of them. We'll look up some recent ones, and we'll see how well. Like our friend here, swinging for the fences in Xilinx, we'll see some people drawing some sizable lines in the sand and see if those lines were crossed, and if so, how far, or if their friends were smiling all the way to the bank with their 2% yield, sir.
Yes. Hey, 2% for a month. Not bad.
Yes, there are certainly worse things, as we've outlined today. All
yes.
right, and with that, we're going to bring to a close and get back out of these dark alleys, because you never know what's going to go happen in these things, and move on into the brighter, sunnier side of the show, where we welcome on Uncle Mike, because it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. It's Monday. That means it's time for Uncle Mike to come on down from the Mountain Stone tablet and smoking jacket in hand, and perhaps bubble pipe in hand as well, to dispense some options, wit, and, if you're lucky, wisdom. Uncle Mike, what do you have in store for us today, sir? I'm on vacation, so my minions are also on vacation as well, so I get no advance notice today. I figured that'd be a slave driver to make them follow me around the southeast, so I'll let them go on vacation as well. I thought that was nice of me.
Well, I think they're still out in the Pacific. When you sent them to Hawaii, and I saw them following me on the beaches, I don't know if they ever came back.
It takes them a long time to get back when they're paddling those canoes all the way from Hawaii, so I'll expect them in the next month or so.
That makes sense. So today I want to go over a butterfly versus a condor, in that the mentality you need with each trade and why you would do one versus the other. All right. So now we have Mr. Longo's opinion on the matter, but nonetheless, I think they're two different trades. And quite frankly, I typically prefer an iron fly versus an iron condor. If indeed I were to delve into the neutral trading world, so to speak. I'm not a fan of set it and forget it, because if you forget it, then you're forgetting about your money, and it doesn't usually work. So with that, you guys have heard Mark and Andrew on the show talk about the tiny premium sellers that they used to run into on the floor. And oftentimes every year they would have a new jacket, well, just because a lot of times they would blow out the firm with whom they would be working for. And what a tiny premium seller would be someone who says, oh, I like this stock at XYZ stocks trading at 50. If I can sell the 30 put on it for a penny and the 70 call on it for a penny, I got 2 pennies coming in, and I'll lever that to high heaven. And it's such a high probability trade. How can I go wrong? Well, you can go wrong. And if a great book to read on tiny premium selling would be When Genius Failed. It's the story of how when long-term capital management blew out a hedge fund, or a blown out hedge fund, and talks about how they did basically tiny premium selling to the most complex and the most levered degree in the history of the planet. And the odds of them blowing out were so slim, but they ended up blowing out and almost taking the whole financial world down with them, quite honestly. So I want to caution condor traders. Oftentimes, that appears to be a phenomenal trade when looking at it for the first time. And I know a lot of people on our show are maybe you're at this stage of your trading. You're in week or month 3 of your trading. You're 3 for 3. You really like how these condors are working. Be cautious. Do not believe for a second that you're immune to the need of risk management. Oftentimes, condor traders get complacent. I've talked on this show before about the golden age of the iron condor, 2006, 2007. I remember when I would travel the country, and probably the most blatant story of them all was I had a guy come up to me and say, I just think people are foolish for not trading this iron condor with the rate of return you can get on it. I mean, come on, where are the odds of the S&P actually moving 8% in 1 month? So long as the S&P doesn't move 8% in 1 month, I got a great trade. I don't see how you can lose on that consistently over time. And so I talked with him about how if you lose once, you're pretty much blown out for several years. And I went through and tried to warn him in various ways. And I don't know where that gentleman ended up taking the advice I gave him, but hopefully he took it. So I would recommend, if you are selling far out of the money premium, heed with caution and have your stop loss point, unless it's with a very small amount of money, have your stop loss point long before the actual underlying touches your short strike. That's how I would like to do it anyway. Folks, if you're a paranoid person, you might be a good condor trader. Reason being is that if you're constantly paranoid about losing money, as soon as it goes against you a little bit, you won't have a problem pulling the trigger to get out. So that might be a realm with which you want to go down. But if you like to smoke the drug that we all do at some point, that is hopium, not opium with an O, hopium with an H, I would probably stay away from an iron condor type of trade. Reason being is that if you have far out of the money premium with which you sell, if you're of the mentality, or you struggle with the mentality of, oh, it'll come back, it'll go my way, condor can be a very dangerous trade for you. So I would probably recommend going more towards the butterfly realm of things. Now, with a butterfly, and by butterfly, I'm referring to a butterfly where you have at the money short strike prices, and you'll get more premium for it, but there's not, if the market moves, depending on how you set up the trade, should the market move, you won't be able to have the coveted clean screen on Sunday night that a lot of condor traders like because their options expire worthless. No, you have to work this. You have to see when vol comes down enough and enough time decay comes into play, you can take your profit, whether you want a higher percentage profit, a lower percentage profit, whatever the case may be. Same holds true with condors. Oftentimes people believe that you can just let these expire worthless, even because they're way far out of the money. What's the worst that can happen? Well, a lot of bad things can happen. So what I would like to recommend is that if you are selling an at-the-money iron butterfly, have your risk-reward point in place. As soon as the stock moves X amount, that's when you get out. Or as soon as enough of X amount of premium comes out of it, that's when you take your profit. And with an iron condor, if you go that route, make sure you have your lines in the sand drawn before you get into them, because that is something to where the evil drug of hopium can really take a lot of people and wipe them out. So that is the strategy for today, June 20th, the first day of summer.
Yeah, you're right. It is the first day of summer. I didn't mention that. But all sorts of fun stuff on board. Thank you for the ongoing debates, condors versus butterflies. Throw in ironflies in there as well, and you have a nice little fun discussion. Good stuff, Uncle Mike. As we turn our attention to our final segment, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Not a heck of a lot kicking it off this week. That isn't what we already talked about at the top of the show, which is the big vote coming up on the 23rd. So kind of all eyes still glued to that. Regardless of what this poll may have said, the vote still has to happen. So it's not a done deal, not by a long shot. If you're not, you have enough Fed in your life as of the FOMC last week. If you're saying to yourself, yeah, I need a little bit more Fed, but don't worry, Miss Yellen's got you covered. She's popping her head up again, talking, I believe, tomorrow, Tuesday, as you're listening to this show. So enjoy that, listeners, because goodness knows we haven't had enough Fed of late. I was just saying to myself, we haven't heard from her in about 4 or 5 days. So let's check in with our friends at the Fed and see what's cooking over there. And of course, that big market mover tomorrow, Lazy Boy, coming out tomorrow. Earnings tomorrow, I believe, after the bell. So there you go, listeners. A lot of big market moving stuff. But in reality, it's going to be all Brexit all the time. Let's start with you, Mr. Rock Lobster. What are you keeping an eye on? Is there anything else aside from Brexit and all the myriad polling and volatility consequences therein? Is there anything else on your mind, sir, or is it all Brexit all the time?
So don't forget to move in bonds. The bond is what? Almost negative interest rates. TLT is at a 2-year high, I think. So the long bond is not yielding a whole lot. So, look at that as something that it pulled back quite a bit between, I think, the peak on Thursday and today. So we've had 3 times this year where, the longer dated government securities really, really rallied hard. Everybody's freaking out because it's going to be the end of whatever, and then nothing happens, and 2 weeks later, the bonds have given back all their gains, and the yields are back up. So that is definitely the other major. I think that the product besides volatility that hasn't really, gold is kind of but bonds definitely have a shot to get back into Stinkville maybe, or give back a lot of their gains, I think, this week. So that's the other big thing we're looking at.
And same question to you, Uncle Mike. Anything else on your radar aside from Brexiting?
I don't see much besides the Brexit. I think that's where all eyes are going to be, is on the Brexit. I really don't see a lot of other things moving this. I'd be interested to see if we get any type of other breaking news that comes out to make it go this way or that way during the week, but I think it's all going to be Brexit related.
All Brexit all the time. Unfortunately, that is all the time we have for this episode of the Option Block. But before we go, let me check back in with my cohorts here on the old All-Star panel one last time, see what they have cooking up that may interest you until the next time we can all gather here together around the old All-Star table. Starting with you, Uncle Mike, what's cooking in the land of RCM alts?
Well, if you would like to work with a financial advisor and you have a couple $100 a month to invest, or even less than that for that matter, give me a call. Would be happy to work with people. I have a lot of clients online, so I have a pretty large client base, but doesn't necessarily have to be a multimillionaire. But if you are a multimillionaire, feel free to call as well. We'll accept you also into our family. My number is 312-212-3531, or send me an email at mtosaw@rcmfs.com.
And speaking of RCM alts, I'll give them a quick plug, too. They have their big event coming up in about a little over a week. The RCM Alternatives event on June 28th. It's at the Merchandise Mart there in Chicago. It's called Beyond the Stock Market, Investing 2.0. So you can learn all about our alts. We'll put a link to that in the show notes, too, so if you guys are so inclined. I tell you the URL myself, but it's crazy long, and you won't remember it. So we'll put it in the show notes if you are so inclined. Or I'm sure if you head on over there to RCM alts or RCM Futures, all the other myriad links, RCM Wealth Advisors, they'll direct it to you as well. And before we go, Mr. Rock Lobster, what's cooking in the land of the pit?
Well, June, we had our Saturday event at the beginning of the month. July, we're having our Pro Trader Summit in Chicago. So it's food and beers and baseball with Mark and I. We also do a lot of trader seminars. It's a fun event. Our clients like it. We're not filled yet. We might have a couple spots, but it's for our clients basically who want to rub elbows with other traders, go to the CBOE floor, ask some questions, check out how it all works, and pull down the curtain a little bit on some of that stuff for people. So this is our 4th year. I think this is our biggest event yet. As we're still a relatively young company. We've been in business for our 5th year, but this is our 4th trader event. So as long as we're here, we're going to keep doing them.
An excuse to drink beer, watch baseball, and eat steak. There are worse things, right?
Exactly. But see, I don't go to Florida every month. I just do this once a year.
My monthly Florida sojourns. I suppose if I didn't do all those trips, then yes, it would look better in hindsight. But check it out, listeners. We'll have a link for you guys in the show notes as well if you are so inclined to register. It is a multi-day extravaganza. We'll be doing some shows from there and everything else. So check it out. It should be fun. And on behalf of the Rock Lobster and Uncle Mike and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And, of course, for sending in such great questions. We'll get to them on Thursday. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.